Did you know hedge funds literally recruit chess players, not traders? Because the person who can sit for 6 hours protecting a king on the board is the same person who can sit through a losing streak without blowing their account. Here's the thing most new traders don't realize. Your first moves matter more than anything. In chess, you don't start with chaos. You start with an opening. The Sicilian, the French, the Queen's Gambit. They're not random. They're frameworks built over centuries. Trading is exactly the same. Your opening is your strategy. Are you an ICT sniper, a scalper, a swing trader? It doesn't matter. What matters is that you have an opening that fits your style. Amateurs improvise, pros prepare. If you come to the market without an opening, you're basically moving your pawn forward blindly and hoping Magnus Carlsen slips up. When you sit down at your desk in the morning and fire up the charts, your opening is not clicking buy or sell. Your opening is how you prepared the night before, whether you know the key liquidity levels for the day, and knowing if we're in a premium or a discount. Here's a famous chess quote. Every pawn move leaves a weakness. Same in trading. Every random trade you place, every impulsive click, is like advancing a pawn too far out. Think about it. Hedge funds recruit chess players for a reason, not because they know candlestick patterns, but because they understand that structure beats emotion. A grandmaster isn't thinking, I feel like moving my knight today. They're following an opening repertoire that's been tested, refined, and proven. And that's exactly what traders need, a repertoire. Your morning open should look like this. Identify your center, the kill zones, liquidity pools, session highs and lows. Decide your bias, bullish or bearish. Know your risk. What's the max you're willing to lose if you're wrong? If you don't win the opening in chess, you're playing defense the rest of the game. If you don't win the opening in trading, you're chasing setups the rest of the day. And chasing, that's not trading, that's emotion. Magnus Carlsen once said, some people think if their opponent plays a beautiful game, it's okay to lose. I don't. You have to be merciless. That's the mentality you need in trading. Your opponent is the market. You don't just roll out of bed and throw pawns forward. You prep, you plan, you strike mercilessly when the opportunity is right. Your edge doesn't start when you click buy. It starts before the session even opens. If you ever watched a brilliant chess game, you know the moves that get replayed on YouTube, the ones that make commentators go wild, aren't the safe little night hops. They're sacrifices. Bobby Fischer said it best. You have to have the fighting spirit, you have to force moves and take chances. And in chess, sometimes you'll give up a knight, a rook, even the queen to set up a devastating checkmate later. Now let's translate that into trading. Every trader wants the instant win, the I found my strategy, now I'm rich moment. But in reality, the path to consistency is paved with sacrifices. You sacrifice comfort, you sacrifice the ego of wanting to be right every time, and most importantly, you sacrifice the need for action. Sometimes the best trade is no trade. That's a sacrifice. You're literally giving up the dopamine hit of being in the market so you can live to strike when the odds are actually in your favor. Think about the losses too. In chess, losing a pawn is not the end of the world. It's the cost of controlling the board. In trading, a small loss is not the end of the world. It's the cost of staying in the game. The only traders who lose are the ones who refuse to sacrifice small losses and instead protect their ego until their account is gone. This is where most people blow it. They think trading is about winning every move. Trading is about surviving the game long enough to win the big one. Put it like this. Imagine you're in a Top Step combine or a funded account. You risk $1,000 to try and catch a $200 trade. You're basically sacrificing your queen to take a pawn. You're flipped upside down. The right sacrifice in trading looks like this. You risk $100 to make $300. You cut the losers fast to preserve your mental capital and skip an entire day because conditions are garbage. To the untrained eye, it looks like weakness, but in reality, it's setting up the checkmate. Sacrifice isn't losing. Sacrifice is trading your short-term ego for your long-term edge. In chess, beginners play for the now. They see a pawn they can capture and boom, they grab it. But masters, they're not playing for the next move. They're playing for the next 10 moves. Magnus Carlsen said, I can sense with my intuition where the pieces are going to be. That's not luck. That's pattern recognition. It's the ability to look at the current position and already know where the game is headed. Now tell me that doesn't sound like trading. The rookie trader is like the beginner chess player. They see price moving up and they jump in long. No context, no plan, just chasing pawns. The master trader, they already know the liquidity levels, they've mapped out the higher time frame narrative, and they can literally see the next 10 moves in price action. Think about it. You've seen setups repeat over and over again. The false breakout, the stop hunt, the liquidity grab before the real move. That's your board. Those are the patterns. This is why trading is not just about memorizing rules. It's about building pattern recognition. ICT says it, Wyckoff said it, Jesse Livermore said it. The patterns repeat. The only thing that changes is the trader's ability to recognize them early. Here's the funny thing. Hedge funds will test recruits with chess puzzles. Why? Because chess puzzles are all about pattern recognition. They're seeing if you can spot the hidden tactic, the trap, the quiet move. It's the exact same skill as looking at the chart and spotting the imbalance that's about to be filled. Let's make it practical. When you're thinking like a beginner, you're saying, oh, price is going up, I should buy. When you're thinking like a master, you're saying, I see an imbalance here, I see where the liquidity sits, I know Asia set the range, and I already know where New York wants to drive the price. That's not guesswork, that's playing 10 moves ahead. When you develop this skill, trading stops being reactive and starts being predictive. You stop chasing and you start waiting, because you already know how the board is being set. Gary Kasparov said, deep calculation is not as important as recognizing patterns. That's huge, because in trading, you don't need a 10-page rule book. You don't need 50 indicators. You just need the ability to recognize what the market is showing you, because it's showing the same thing over and over. If you ever watched a chess match at a high level, you'll notice something. The best players sit there for hours, staring at the board, barely moving, calm, collected, almost like stone statues. Why? Because they know one emotional slip, one tilt moment, and the whole game is lost. Now think about trading. You're in profit, but you get greedy. You're in drawdown, but you get revengeful. Boom, your account's gone. It's the exact same thing. In chess, they call it tilt. You blunder a piece, and instead of slowing down, you try to win it all back with some wild, reckless attack. And what happens? You lose even faster. Sound familiar? Because in trading, that's literally revenge trading. Bobby Fischer once said, to win, you have to have the will to tolerate blows. Read that again. He wasn't just talking about chess. He was talking about life, trading, everything. If you can't take a hit without losing your mind, you're done. Blowing your funded account isn't usually because your strategy sucked. It's because your emotions did. It wasn't the market. It was you. You tilted like a chess newbie throwing pawns at queens. The hedge funds know this too. That's why they hire chess players. Not just because they can see patterns, but because they can sit and they can wait. They can lose a pawn without losing their mind. That's exactly what you need as a trader. Discipline isn't about having the perfect strategy. It's about having the ability to do nothing when doing something would destroy you. Gary Kasparov said, the ability to play under pressure is the mark of a great player. That's it. That's trading. Because trading is pressure. Red P&L, missed entries, drawdown. If you tilt, you're done. So the next time you feel the urge to overtrade, remember this. Every blunder starts with tilt. Every blown account starts with emotion. If you can master your emotions, you can master the game. Because in chess and in trading, the cool head always wins. If there's one lesson chess teaches that applies directly to trading, it's this. You can't win without sacrifice. Think about it. Every chess game has that moment where you give up a pawn or a bigger piece because you see the bigger picture. Here's a great quote from world champion Emanuel Lasker. When you see a good move, look for a better one. This is patience in action. Don't just grab the first shiny trade that you see. Wait, hold, let the market show you a better move. The lack of patience is literally how most traders blow accounts. They want to flip $100 into $10,000 by Friday. They want instant gratification. But here's the truth. Chess grandmasters study for decades. Hedge funds play the long game for years. Why do retail traders think they're going to master this game in 3 weeks? You ever see a beginner in chess try to do the checkmate in 4 moves? Yeah, it works on kids, but try that against a master and you'll get destroyed. That's exactly what happens when retail traders try to force quick flips on the market. The market laughs, takes your pawn, then your rook, then your queen, then your account. The patience play isn't sexy. It's not TikTok worthy in itself, but the patience is what creates the TikTok worthy win later. Because the guy who sacrifices comfort today is the guy flexing the payout tomorrow. In trading, patience is the highest leverage tool you have. Patience to wait for the setup. Patience to let winners run. Patience to grow your skill over years, not days. Here's a final quote. The winner of the game is the player who makes the next to last mistake. Think about that. It's not about being perfect. It's about lasting longer. It's about being patient enough to let the other side tilt first. And in trading, that's exactly how it works. You don't need to be perfect. The only way to last in this game is to enjoy the journey, embrace the sacrifices, and play the long game. That's what chess masters do. That's what pro traders do. Because in the end, trading isn't about fast money. It's about survival, patience, and positioning yourself for the checkmate years down the line.